What is a short sale? Short sale inland is where a fiscally vexed home loan holder sells their property for not buy, and large the total due on the home advance. The property buyer is an outcast, not the bank, and all profits from the sale go to the credit subject matter expert. The bank either pardons the differentiation or gets an inadequacy judgment against the borrower, anticipating they should pay the advance expert all or part of the difference between the sale cost and the primary worth of the home credit. In specific expresses, this qualification ought to be legitimately pardoned in a short sale. Short sale versus foreclosure. Shareholders versus stakeholders. Short sales and foreclosures are two money-related options available to property holders behind on their home advance portions, who have a home that is lower, or both. In the two cases, the owner constrains to leave behind the home. In any case, the plan and results are unprecedented. A foreclosure is the exhibit of the credit expert clutching the home after the borrower fails to make portions. Foreclosure is the last decision for the advance-trained professional. Rather than a short sale, foreclosures are begun by credit experts. The moneylender moves against the delinquent borrower to drive the sale of a home, needing to finish its essential endeavor of the home advance. Moreover, rather than most short sales, various foreclosures happen when the home loan holder has abandoned the home. If the occupants have not yet left home, they are expelled by the advance expert in the foreclosure connection. Ways to measure. Before you buy a short sale, see a segment of the fundamental rules that go with the association. You won't have the choice to buy a lasting spot to remain at a reasonable expense. Here are a couple of things to recall. The seller ought to show they have no other option. Then, at that point, the seller needs to show a kind of trouble. Suppose they can show that they can't keep on making contract portions and eventually default. In that case, the advance expert will undoubtedly agree, especially expecting the moneylender might not want to go through the foreclosure cycle and sell the home isolated. A home's expense ought to be as per market regard. Generally speaking, short sales go through because the market is wallowing, and the home's assessment has dropped in like way. The worth the buyer is paying must regularly be at market regard. Short sales ought to uncover. Finally, when a house record for not as much as what's owed on the home credit, that ought to uncover blunt. Potential buyers should realize that the sale cost on the home advance equilibrium, so they'll be at risk for wheeling and dealing with a bank, similarly as dealing with the seller. Advantages of buying a short sale. Here are some disadvantages of buying a short sale. Long-term process. It is not best for those requiring or hoping to buy a property quickly. Getting a short sale embrace can be a long collaboration, which can be done by conceivable take up to a year to be close. Various segments can affect this timetable, including a credit expert's encounter overseeing short sales, whether or not the seller viably upheld for a short sale, and the number of banks included. Moneylender could counter, reject or not respond. Whether or not their bank has adequately upheld a seller for a short sale, there is no affirmation that the moneylender will recognize your offer. They may acknowledge your offer is exorbitantly low. Provided that this is true, the bank may counter your offer, level out reject your offer, or may not respond to it. This is a colossal and certifiable threat considering you may have adequately been holding up months to attempt to get to this point. Opportunity cost. Short sales present another risk because the extended short sale communication could make you leave behind other expected buys. With all your time and resources confined in short sale trades for a seriously long time, you could leave behind a better endeavor opportunity. Property without any assurances. Sellers trying to organize a short sale are ordinarily experiencing a sort of financial trouble. Like this, they probably won't have the money to do upkeep on their property. This frailty to remain mindful of help may act naturally clear, or it may lie further in essential, electrical, or plumbing issues. The seller approved. Since someone pitches a property as a short sale doesn't mean they support one. They may think they meet all necessities for a short sale, yet except if they genuinely support by the bank or home credit moneylender, this portrayal ends up being meaningless. Moneylenders prefer all cash or large down payments. Another peril of a short sale is passing up the property to an all-cash buyer or a buyer who can put down a gigantic front and center portion. When consenting to a short sale, banks and diverse advance experts like to deal with these sorts of buyers. Last thought. If you're contemplating short selling your home, you may be going through money-related difficulties. See the sum of your decisions to stay in your home. Your underlying advance should converse with your advanced subject matter expert. They may have the alternative to bring to the table a revised portion plan or credit change.